You are listening to the CMQ Investing Podcast. My name is Chris Franco, and I've received several questions and several requests to discuss what's going on with Alibaba potentially being delisted from U.S. stock exchanges. So I plan to read a very specific question from a CMQ investor named Sammy who wanted to know basically what I'm going to do as a result, and I will share all those details with you shortly. But first, I want to begin with a brand new article in Fortune.com. I've been doing just a load of research on this topic. This article is probably the best summary that I've come across. So I think for those of you who are, maybe less aware of what's going on with Alibaba or just not as literally invested, this article does a great job of giving us some history and helping us really understand how Alibaba has evolved from being like, the belle of Wall Street to now, on the verge of being kicked out. So let's start with that. Then I will get to the question. I'll tell you what I'm doing, and we will make an episode out of it. Before we go any further, I'd really appreciate if you would follow CMQ Investing on Spotify or Apple Podcasts. 5-star ratings and written reviews go a long way as well. I appreciate you. We all appreciate you. Let's get to it. Almost 8 years ago, Alibaba founder Jack Ma watched as 8 of his customers rang the opening bell at the New York Stock Exchange, marking the first trading day for the Chinese e-commerce company. Alibaba had just completed the world's largest IPO at the time, raising $25 billion at $68 a share. One trader told Fortune at the time that he'd never seen anything like the hype that marked Alibaba's trading debut. Ma was mobbed by reporters as he wandered the trading floor. Some traders even reportedly wore hoodies in Alibaba's trademark orange, rather than their traditional suit and tie. Shares surged 38% on the first day of trading, but Alibaba's run on the U.S. stock exchange could soon come to an undignified end. On Friday, the U.S. Securities and Exchange Commission added Alibaba to its provisional list of companies that would be delisted from U.S. exchanges under the 2020 Holding Foreign Companies Accountable Act, meant to force U.S.-listed Chinese firms to open their books to U.S. inspectors. In other words, we want U.S. auditors to audit the audits. The SEC has threatened to boot Chinese firms from U.S. exchanges for years, and it has even named other prominent firms. A total of 160 companies have been identified as violating the Holding Foreign Companies Accountable Act. But Alibaba's notoriety, Ma's flamboyance, and the firm's special place in Wall Street history make the Chinese internet giant the new face of the $1.3 trillion delisting saga and put the looming crisis front and center in a way it hasn't been before. The SEC's threat to delist Alibaba is a new chapter in a years-long dispute between U.S. and Chinese regulators over how to audit Chinese companies listed in the U.S. The fight over auditing requirements puts all 261 U.S.-listed Chinese companies at risk of being forced to leave U.S. markets. Technically, Chinese companies listed in the U.S. are supposed to make their books available to U.S. regulators, but Beijing has barred such access under national security concerns. The U.S. let non-compliant firms slide until 2020, when Congress passed the Holding Foreign Companies Accountable Act, which stipulates that if a company's auditor does not allow U.S. inspections for 3 consecutive years, the company will be forced off U.S. exchanges. Since the law's passage, Beijing and Washington have tried to strike a compromise that would allow U.S.-listed Chinese companies to stay put. Earlier this year, Beijing offered to grant foreign auditors access to Chinese documents that would also reserve the right to redact classified or security-related information as deemed fit. Last week, the Financial Times reported that Beijing was considering establishing a multi-tier system categorizing the national security risk of overseas listed companies, with U.S. regulators granted full access to companies that have non-sensitive data. Chinese securities regulator denied it was developing such a classification. U.S. regulators are skeptical that a compromise is possible, with SEC Chair Gary Gensler saying in July that he was not particularly confident about the prospects for a deal, saying that the law requires full access. On Wednesday, Gensler said that the U.S. would not send auditing inspectors to China or Hong Kong until Beijing agreed to grant auditing access, which needs to happen soon if inspectors had any chance of approving documents this year. In Alibaba's case, Beijing may consider the giant e-commerce company with data on over 1 billion users too sensitive to receive foreign scrutiny, teeing the firm up for delisting. On Monday, Alibaba said it would strive to maintain its listing status on both the New York Stock Exchange and the Hong Kong Stock Exchange in a statement filed to Hong Kong Exchange and Clearing, where the e-commerce firm has a secondary listing. Alibaba's exit from Wall Street, if it happens, would be a dramatic change in fortune from when it arrived. Alibaba's 2014 IPO is still the world's second largest initial public offering. The IPO was the premier listing in what became a wave of debuts by Chinese firms between 2013 and 2021 as U.S. investors raced to cash in on China's tech boom. U.S. institutional investors alone hold $200 billion in Chinese American depository receipts, which allow American investors to buy shares in Chinese firms. DD Global's $4.4 billion IPO in June 2021 ended the crush of China's IPOs in the U.S. Data security concerns from Chinese regulators led to a crackdown on the ride-hailing company and greater scrutiny on overseas listings. As U.S.-China relations soured, several companies listed on U.S. exchanges returned to China to launch secondary homecoming listings. Alibaba itself launched a secondary listing in Hong Kong in 2019, raising $12.9 billion. On July 26, Alibaba announced that it would upgrade its secondary listing in Hong Kong to a primary listing. By upgrading its listing, Alibaba might be able to take advantage of a scheme that allows direct access to mainland China investors, with wealth management firm Bernstein predicting that the e-commerce firm could get as much as $21 billion in investor inflows from mainland China. An upgraded listing could also serve as a backup plan for Alibaba if it's ejected from Wall Street. The threat of delistings may encourage other U.S.-listed Chinese companies to launch primary listings in Hong Kong, which would boost the city's flagging stock market. Two other Chinese firms on the SEC's list, e-commerce platform Dingdong and cloud computing company Kingsoft Cloud, are reportedly following Alibaba's lead and launching primary listings in Hong Kong. So this is very interesting, and I really liked how this article provided a lot more context. I mean, I was not as conscious of Alibaba back when the IPO happened, and understanding the complete journey. And I know that sounds so corny, that Alibaba has been on from that point to now. It's it is a pretty big change, and it's not just been because of scrutiny or regulation, rather, from the United States. It's also been, as we know and we've talked about, all the different regulatory pressures and penalties that Alibaba has received back where it's headquartered, that is in China. So, okay, so now we're all up to speed about what happened. Here's what Sammy asked me. He said, Franco, since you are probably the best person to ask, are you worried about all the Alibaba delisting warnings? I'm trying to stay calm, but it's not as easy for a relatively new investor. Okay, so I am not overly concerned about the delisting situation, and I'll explain to you why. First and foremost, Alibaba has until 2024 to comply with this. Now, that doesn't mean everything's going to work out, but it's not as if, this is something where if they don't, get everything sorted out by tomorrow that, it's over. I don't think a lot of people, at least that probably reacted to that news, are aware of that. Secondly, if Alibaba is delisted and they're only available, or the stock is only available on the Hong Kong Stock Exchange, well, that doesn't change what you have. You're not going to, the value of your Alibaba shares, or the equivalent of shares, rather, it's not going to go to zero. Investors in the United States are able to convert to the Hong Kong Stock Exchange. So from what I've read, and again, I've not gone through this myself, but it's apparently not that big of a deal. It's not a crazy process. It's not terribly expensive. It's just, it's a little bit different, right? I prefer not to have to do that. Another reason that I'm not really freaked out about this, or at least not yet, is because back in March, there was a similar sort of news announcement that caused the stock to just fall off a cliff. And I remember when that happened, I did a video on YouTube about this. I found from just kind of digging a little bit deeper that it sounded like officials in Beijing were, totally willing to play ball with us. But yet the way the news reported on it here, it sounded like, there was this big contentious thing. Now, actions speak louder than words, so we'll see what happens. But that was something that I have experienced before. So when I saw this news, it was just like, okay, here we go again. And last but not least, I mean, this has just been the pleasure of being an Alibaba shareholder. I mean, just anytime there's the slightest hint of bad news, the stock falls out of the sky. You might remember, I think I also did a YouTube video about this. There was a gentleman in China with the last name Ma that was arrested. It was not Jack Ma. And when that happened, the word got out and people so quickly overreacted that I think $26 billion worth of value was wiped from the market cap. Don't hold me to that exact number, but it was, an extreme overreaction. And I think we'll continue to see that. If you're a long-term holder of Alibaba, I would expect a lot more of these crazy swings. And it's a lesson for me of like, this is not my favorite way to invest. For those of you who are wondering, I just recently updated my allocation. Alibaba is 4.5% of my stock portfolio. It has not changed since I last shared that with you. I've not sold a share. I'm very comfortable with what I have. I recognize that there is risk involved, but I feel comfortable with the size of the position that I have. I'm not recommending, and I never do recommend any individual stocks to anyone. In fact, I think this is a very risky investment that we're all learning lots of lessons in real time from. But anyway, I hope this was helpful. I'll say one last thing to Sammy and anyone else. I think it's really easy to get thrown off by what's going on right now with Alibaba, and just like any stock that has these kind of, suddenly you think you know what you have and then it falls out of the sky. But delisting is not the end of the world. I don't think it's ideal, but it's not the end of the world, and it doesn't mean that you're going to lose. At least from what's I can understand historically speaking, it doesn't mean that you're suddenly going to lose all your money. Now, something to keep an eye on, and I don't think Alibaba's necessarily doing this, but the big fear is that if the United States auditors review the audits and they find that maybe the books have been cooked, like with luck and coffee, that would be the nightmare scenario. But I think that's a very unlikely scenario, but something that we can definitely talk about in future episodes. If you have any feedback, I created cmqfeedback.com. It's not fancy. It's just a very efficient way for you to share any thoughts, feedback, comments, ideas, so I can get it all in one place and just implement it faster, because I want to continue making just better and better content for you. So I appreciate everybody for listening. Please follow, whether you're listening on Spotify or Apple. Leave a review, leave a rating. It goes a long way. For CMQ Investing, this is Chris Franco. We'll talk soon.